Hey guys, Kenneth Yim here. Today's talk is pretty interesting. It's about rent to own. At first, I thought it was kind of a scam, but in learning more about this opportunity with this group here, where they have a whole bunch of investors and people that need to borrow as well too, and they're the ones that match everybody. I think it's a great option for those that don't have the down payment, and either you have bad credit or good credit, and you just need the time to either save the down payment or save the down payment and improve your credit. I think it's a good option, and at least you can participate in the real estate market without having to rent and throw your money away that way. So it's a good listen. Check it out and stay tuned.
So we are with HOS Financial. Our rent-to-own program is known as Homeowner Soon, and we call it a path to home ownership because we have multiple paths that people can travel to get to home ownership, but specifically we're talking about rent to own here this morning. My name is change of Dale. My name is Terry Hepditch. My partner is Dale Tidd. I'm principal partner with HOS Financial, and Dale is also a director with HOS Financial. My background is banking, but more recently, I've been in the rent-own industry for 15 years and currently recently finished a position with CARUP, which is the Canadian Association of Rent-Own Professionals. And I sat on that board as president for a few years, and my term ended last October. And I've been in the mortgage and real estate industry I tell everybody I'm 147 years old, and I've been around for a while. Our company, just a little bit about HOS Financial. We've been in the industry, the rent-own industry, since 2005. A couple years before that, but officially 2005, we started to bring our product to mortgage agents and real estate agents to give them an option to provide a path to home ownership for people that maybe didn't qualify at the bank level. And here's a little history of how we've grown over the years. But right now we have, I think we just hit 1,080 transactions that we facilitated since we've been in the space. And we're a diamond member with CARUP, which is the highest designation. We were the first company in Ontario to achieve that. So we've been around for a long time. We maintain good ratings with Better Business Bureau, and most of our Google My Business ratings are high. So we've got a high level of expertise, and we feel that our platform leads the industry as far as rent-to-own goes. So when we talk about rent-to-own in a room, right, I always ask people if they have heard the phrase that rent-to-own is a scam. Right? There's some things in the industry that are out there about rent to own. Sitting on the board of CARUP for the number of years that I did, I can assure you that rent to own is a very relevant mainstream home buying product. But has anybody, and I'll just put that out there for the floor, has anybody heard negative stigmas about rent to own that they'd like to share at this point? Before we go further in the conversation, maybe we can just address some of those things.
I haven't heard about anything negative. I'm just wondering why
Awesome.
it isn't so popular in Toronto in a big urban market like this.
Well, I believe that it's Ken, we've been around for 16 years, and we have been marketing to real estate agents and mortgage agents for the last 12 years aggressively. So if you haven't made it to our mailing list, I'm surprised, but we're on a mission now through CARUP and through our own company to reach out and reach as many partner offices as we can, mortgages and real estate. So, it's been around forever. And I always get surprised too, Cam, when I have people that say, oh, I've never heard of rent-to-own before, right? I get shocked by that because it's been around, and because we've been so active and done so many files. I keep surprised to hear it. So there was a couple of chats there. I don't think agents understand the concept, and there is more education needed in this space. Absolutely true, Carlo. And that's our mission here, is to get out and talk to as many professionals like yourself to show you the option of rent own and how it can be a fantastic tool to have in your belt when you're talking to clients that don't get through bank financing. So through this presentation, we'll talk about rent-own, some of the mechanics on a high level, and then we'll have some questions and answer. But my objective as we go through this presentation is to change the perception of rent-to-own being anything but, or change the perception of rent-own being a scam or having challenges to, this is a mainstream product that, quite honestly, I'd have no issue putting anybody that I'm related to, close or otherwise, into the product, because I know it works 1,000%. Dale, if you want to change the screen.
There's a response from Krista. She said, yes, I've heard rent to own is a scam set up to make the renter fail and avoid rent to own at all costs, etc. And also be careful. Oh, it went. There it is. And also be careful because there are some that are okay and some are scams.
Yeah. So and I'll just talk to that just on a high level just for a second. When I sat on the board of CARUP as president, I got to learn a lot about all the other facilitators in Canada that provide rent-own as an option for their clients. And I also got to learn about some other dealers that weren't members of CARUP that maybe took a more of a unscrupulous approach to trying to help clients. And I've seen rent to own because it's been around for so long and there's so many versions of what people try to come out with. There are programs that are set up to fail right from the beginning. The challenge is that the person who's providing the rent to own service doesn't realize that it's doomed to fail, because rent to own used to be just a program where people would accumulate down payment before CMHC and insurers came on, because you couldn't get a mortgage. My dad worked as a bank manager and they used to use rent to own back in the 60s to allow people to build the down payment. But that's before we came into having to understand credit scores, bank requirements and stuff to move them into a right product. So rent to own has become a lot more sophisticated. And as you'll see in our platform, as we talk, we have built in pieces to make sure that any trap doors that a consumer or a client might fall through have been shut tight. Our program is very tight, and I would recommend any client that you have that can't get through traditional financing that still has an ambition to buy a house to look harder at our program. I really recommend that, because once they leave the office of their financing and they come back to you as a realtor saying, I can't get approved through the bank, they're not going to stop looking for options to buy a house. And they will eventually come to, and there's more and more rent-own dealers on the market, they will eventually come on to and find out about rent-own and realize that this is a fantastic model to help them achieve that goal of getting into a home. So as we go through, my passion is rent-own. I love it. I love helping people. I'm a Newfoundlander by birth. I talk fast, so if I get Dale too fast, and you know how I get going talking about it. If I get too fast in my speed, slow me down. But my goal is to eliminate any preconceived notions about rent to own that you may have gotten through other sources, to make you feel comfortable that you can move your clients over into our space and feel very comfortable about how they're going to be taken care of. So we'll talk a little bit about the paths that people travel when they look at home ownership. There's two common paths. And the first common path that people have is they decide, I'm going to rent, save my money, and buy a house later. And I'm sure that you have lots of people that you have in your Rolodex, in your database, that are clients that are doing this to save the money to buy a house in the future. I can't remember who it was, but there was an article a couple of years ago that said that consumers today face two big challenges. Number one, the house prices that are rising and the ability to save the down payment for those rising prices. So rent to own allows certain things to happen that prevents the challenges that most consumers have when they're trying to get into the market. But if you look at rent to own as a path, the rent, save, and buy path, just, there's monthly rent payments which are subject to rental increase. I'm sure you've heard lots of people that are out there now, and they call and say, I need to get out because my landlord is selling the house and I have nowhere to rent. And a lot of times they don't have the down payment saved. And that's one of the challenges when you're doing it on your own, is you have to have the discipline to save the down payment as you go along. You have to make sure your credit score meets the bank profile. And if you're not working with a professional to help coach you and somebody who understands the rules, you may not be setting yourself up for success. And some other things, we won't elaborate on all of them, but there's no equity being built in a rental model. There's no agreement to buy the property in a rental model. And a big piece is that when people are renting and they're waiting to buy, when they do buy, the price they pay is the market price. Now, of course, that's true, but if somebody's looking at it from 3 years out with the appreciation rates and the bidding wars that are present in the market today, house prices are climbing at such a rate and if you had the ability to lock in that price and know what you pay for a house in the future, is a huge benefit in a market like we're experiencing right now. The down payment is 5% of the future. If we go back up, Dale, 1 second. The down payment is 5% of the future market value. And because you're paying a higher price for the house when you buy it on the open market, your higher price results in a higher mortgage and higher interest costs over the first term of your mortgage. Then you have the rent-to-own path. And the rent-to-own path eliminates some of the challenges in the rent, save, and buy model. First of all, there's no change in the monthly payment. The client pays an occupancy fee that doesn't change for the whole term. The monthly payments are structured, so there is a savings component that happens automatically. The client doesn't have to show self-discipline. It's part of the payment structure. Credit and financial coaching is provided, so we will take clients from I can't qualify for a mortgage because I have credit to being ready for a mortgage because my credit profile is greatly improved. With our program, they can build significant equity in a property, especially in markets where the appreciation rates are 5% or more per year. In our program, we rarely go over 4% for the appreciation as we determine what the future purchase price is going to be. The future purchase price and agreement are in place before we start, so the consumer knows what they're going to pay for the house. The price is capped. They can get into the market today with 3% of today's purchase price versus 5% of the future value. And with a lower purchase price comes lower mortgage and lower interest costs. So rent to own closes some of the trap doors that clients are facing when they're renting, saving money on their own, because we cap the future purchase price. They can get in at a lower down payment, and we provide the coaching services that they need to remove any barriers that stop them from getting a mortgage today so that they can move into the ownership position within 2 to 5 years. Typically, our programs run 2 to 5 years. So who can benefit from rent to own? When you look at clients that you deal with on a day-to-day basis, I'm sure you have more and more clients now that are challenged to get through the bank gate because they moved the qualifying rate for the stress test up to 5.25. Don't know if you're feeling the impact of that in the market, but we're starting to see an uptick in the number of clients that are coming to us because they can't get past the stress test of 5.25. So if you have clients that are in your purview now that face that challenge, rent to own could be a great option for them to consider to get into get on a path to home ownership. And clients that, most clients that come into our program, they have a challenge with their credit score or their credit profile. So we have a team of experts that will bring them into our environment and coach them to eliminate, again, the barriers that stop them from getting into a mortgage. Other clients that would be target clients for us would be, next screen, Dale, if you don't mind, would be clients that are, they have excellent credit. So you have a young millennial couple, professionally employed, and they're on that hamster wheel trying to save the down payment, but they just can't get there. They can come into our program with less than 5% down because their credit profile is higher, and we don't have to put as much emphasis on building their credit. The emphasis will be on building their down payment. So they can come in with as low as 3% down with the right credit profile. Clients who are new to the country, self-employed, a lot of clients that are trying to buy now that are self-employed have challenges through the banks. We work with self-employed. We have great tools to help them get positioned for the bank in the future. People who are starting a new career or people who are in or have just exited a consumer proposal or bankruptcy. We can also work with clients that have those profiles.
So Terry, just really quickly, just to recap. So you have two streams, almost like people with bad credit and people with good credit, plus all the other scenarios that you just mentioned there. Is that correct?
Yeah, the clients that have the higher credit scores, they can usually get into our program with a lower down payment. clients that have the bruise credit, we usually start with 5%.
So that bruise credit, anything under 650 or
And anything under 650. Yeah, we look for 650 and above for 3%. Anything under, we look for 5 to start.
Okay, thank you.
And the reason is, well, I'll just tell you briefly, the reason is because building the down payment and the credit profile at the same time, they're the highest risk clients when they go for the mortgage exit. And we'll talk a little bit about that in our training sessions, which I'm going to share with you in a few minutes. So when you look at rent to own, right, people say, well, you know, what is rent to own? And really, what prevents, or what do you have in your program that prevents people from maybe not exiting or failing in a rent to own? Well, for us, the first thing that we look at is affordability. We won't put anybody in our program if we feel that the budget is just not there. Now, banks look at TDS ratios of, I believe, 44% is Sagan, one goes up to 44. We'll go up to 45, 46% on a TDS, because in our payment structure, there's a component of savings. So we know that the payment is elevated because of the savings component. So we've got some flexibility, but we want to make sure first and foremost that the client is able to make the monthly payment. If not, we can't move forward. We don't want we don't want failures in our program. The reputation of our program is only based on how many people we exit. So we won't put people in if we feel they're over their skis. We have to have a predefined exit strategy. And this is the second most critical component in any rent-to-own program, in my opinion, is how do you take the client from where they are into a future mortgage? So we do extensive interviewing, vetting and stuff with the client to make sure that they agree to the path that we're putting them on for future success, right? So we have a very structured path to a future mortgage. And that usually requires, you know, credit profile building, credit score building. Some people come in, they need to accumulate more down payment. That will be your higher credit score clients. A lot of self-employed clients come into our purview because we can put them on a 3 to 5 year plan to start declaring the income that they need. We know they have the income in their business, but through creative accounting, they dwindle their gross down to such a small amount they can't get through the bank. So we have good strategies to help the self-employed, and it's a great place for somebody who's just started a new job and they just need job tenure to get it up to 2 to 3 years to get the bank qualifying. Property structure contracts are the next most important thing. Somebody said earlier on the call that they've heard people fail rent-own. Structured contracts, there's a lot of the reasons why people can't complete rent-own programs, because when they go for bank financing at the back end, the contracts are not accepted by the lenders, and if they get past the lender's gateway, they're not accepted by the insurers. We see that as the major major problem with a lot of rent-own programs. Rent-own is a very new concept to a lot of people. So when we bring people into our platform, we ask them to get mandatory ILA on any of our contracts that we create before they start the program. We encourage people to have insurance protection. So when they enter our program, they meet with a financial planner and they cover off the life and other insurance components. And of course, the path to home ownership, which usually involves the credit coaching and credit improvement strategy.
ILA is independent legal advice for anybody who doesn't know.
Oh, sure. My apologies. Yes.
Yeah, just sure. Just be safe.
Thank you, Ken. So rent-own, how does it work? Simplified, it starts with the application, right? This is where the affordability is determined. And our target purchase price, right, for the GTA, we'll say, is around $600,000. The sweet spot for investors used to be $400,000, but because house price, the average prices are coming up, our target price is $600,000. But we can work with, excuse me, clients that want to buy houses up to $2 million. We can fund them through our rent-own program. So if you have clients that are looking for the higher price points that still can't get through the bank, we can accommodate some of those. So when you're talking to a client and you're saying, well, how much affordability, or how much house price can they buy or get into typically we say it's 5 times total family income. So if you're talking to a family, it's, you know, they make 120,000, 5 times simply their purchase price target would be $600,000 based on that. Down payment, 3% of the purchase price. Typically, and that's just a straight formula. Typically, we'd like to see 9,000 plus as a minimum, but 3% they can start if they're down, if their credit score is higher than 650. The down payment grows. So when a client starts the rent-own program, they'll bring in their initial deposit of 3 to 5%. And each month when they make a payment, 20% of the total payment is put aside and considered option credits. And that accumulates every month. So when we look at analyzing an application, we already know what the future purchase price is going to be because we apply an appreciation rate. We already know what their starting down payment is. And because we know what their savings component is in the term, we can calculate what their future mortgage is, and we'll qualify them for that future mortgage based on their income and other things, assuming their credit score and everything else will be in the right position when they get to the back end. When we quote a client a payment, it's all inclusive. So they would have to pay the lease payment for the program and utilities. There's no insurance, there's no taxes or anything extra, and the savings is included in the payment that we quote. The future mortgage, again, we know that the future purchase price is predetermined. We know what it is. So the future mortgage is simply the future purchase price less their initial down payment and their total savings component. So again, we know the exit strategy for the mortgage. The future purchase price, original purchase price of $600,000, and again, typical appreciation rates we use are 3.5% to 6%, but rarely do we go over 4%. And every client that comes into our rent-own program is required to enroll in our Path to Home Ownership platform. And that's where they receive the coaching and the guidance based on the exit strategy that we put in place to make sure that they get to the future mortgage. And we'll talk about the Path to Home Ownership just for a few minutes as we get later into the presentation. Go, Joe. So I mentioned in the early part, when people look at rent-own versus renting, right? There is going to be an increase in the monthly payment for a rent-own program versus a rental payment. But when you look at the ability to build equity in the program, that's where the whole economic value of rent-own has to be understood by the client. Because if you look at somebody who's coming in at a transaction price of $600,000 in a 3-year term, where the market trends are 12% a year, and right now in Ontario, that's quite a few markets. We only apply an appreciation rate of 4%. The market value of that property in 3 years using 12% is going to be $843. But under our contracts, the client is going to be locked into a price that in 3 years they'll pay $675. So the difference is equity that they actually build while they're in the rent-own program. So imagine this, having a conversation with your client saying, well, I couldn't get qualified for a mortgage, I won't be able to buy a house. Well, hang on a second. I have another tool in my tool belt here that I can show you how you can get into that house, and not only get into the house, but build equity while you're in there. Not a bad deal for somebody who's not qualified for a mortgage today to be able to move into a path to home ownership where they know what the future purchase price is going to be. And when they get to that exciting day to buy the house, it comes with $150,000 to $200,000 in equity. It's a tremendous, gratifying feeling for the family. We actually had a client that came into our program in London that's exiting at 246, and the house value was 700. So they earned almost $400,000 in equity. So those are some of the high level components of rent to own and the way that we structure it. So I'm going to turn the table over to my partner, Dale here. Dale's going to talk a little bit about our process and how you get us your value clients so that we can take them into our funnel, treat them like gold, and put them on a path to buy a home.
Okay, great.
Sorry, Terry,
Well,
sorry,
yes.
Dale. Sorry, before you do that, it looks too good to be true to see that if properties are appreciating at a double digits, and especially in Toronto, how do you get the investor involved in this to for that kind of appetite for that?
Well, that's the other side of our business is the investor side. Our returns are targeted to come out with pretty uniform returns of about 26% ROI, right? So if there's anybody on the call that would like to know more about the investor side of it, we're happy to come back and revisit that. And it's a different presentation. I'll bring in a different team to present that, but happy to do that and to show you the value from the investor side as well. Happy to do that.
Thank you very much. Thank you.
You're
Awesome.
welcome. So
Okay,
Dale,
so
it's
now,
over to you now.
sure, thank you, Terry. So now, how do we accept the files, and how do we go through and processing the applications on the front end? So we have a form here. Guy Liu, he is he's one of the owners of HOS Financial, and he's considered the grandfather of rent to own in Canada. By the way, he's one of the originators of rent to own. So he is very masterful at looking at files and also underwriting files. He's just one of the people on our team that helps underwrite the files on the back end. So what we're looking for, as I mentioned, location, Ontario, $600,000 plus. And of course, we will accept files that are less than $600,000, of course, depending on the file structure, the client structure, of course. But and we look for anywhere from a 3% plus deposit, right? So those are some of the requirements. So we'll underwrite the file. After we underwrite the file, then we go into investor matching. And at this stage here, when we close, so what we do at this point, throughout the entire process, we communicate with you, right? So we let you know that the client has completed the underwriting. We'll let you know that the client is right now being matched with an investor, and we know when they're being matched with an investor, then that's the point to be engaging the agent, because at that point they're going to start looking for a home. So being of course, the real estate agent and the referring agent, at that point, you'll be working with the agent to work with the client to find a home. And of course, because the relationship with Key Rate right now, the real estate agent and the mortgage agent for Key Rate work together with HOS to help close the client on a home. And once they've closed, then they enter into a path of ownership program, provide them support, throughout the program for the term, and of course the exit at the end with the mortgage as well. So obviously, because they're buying the property, that's another opportunity to engage with the client on the back end once they complete a term within 3 to 5 years. So staying in connection with the client throughout the term is very important, because obviously when they exit, they want to be able to purchase a home from the investor. Okay, so that's the process flow. Now I've shortened it tremendously because there's a lot of other mechanisms that goes on in the background as well. Okay, so some of the partner benefits. Of course. Terry, you want to take this from here, or you want to?
Yeah, I'll come back in here. It's fine.
Yeah, no problem.
Yeah. So you, as a real estate agent, right? When you have clients that can't get through traditional means, if you bring them over to rent to own, we'll work with the client. We'll explain the program to the client for you. You don't have to be the expert. And our goal would be to save your commission, right? Because you have a client that can't buy a house. So one of the major benefits is to save your real estate commission. Even though the client you've been working with won't be your buyer in a rent-own situation, our investor will. It still gives you the opportunity to work with our investor. So we will substitute your buyer for our investor. You represent them on the purchase. You keep your commission. You can earn more commissions through our program because we see 400 inquiries a month right now, and that's climbing. So we have a constant supply of opportunities. And if you have investors that are looking for opportunities to invest in real estate, and you want to promote our opportunities to them, because we're providing an ROI of average of 26%, and they decide that they would like to move forward and consider this option, you would be the realtor to represent the investor to buy the house for our tenant. So you can get on our list to receive opportunities as we present them or release them out to our general population of investors. And if you have somebody in your Rolodex, you might be able to approach them and ask them if they're interested in that part. and earn a commission by selling the house through those means. We would never go direct to your investors. We would always go through you to present the opportunities to your investors. We have, as I said, 400 plus inquiries and growing every month. A lot of those clients come in and they do not have anybody attached to them as far as a realtor. And we're always looking for good realtors who endorse our program and rent to own to send out referrals to. So if you want to come in and learn our program and be, you know, educated and be able to talk about it, because it does help when you're negotiating with sellers. If you want to be part of our team, we're happy to refer clients to you on a monthly basis for you to represent them to buy a property. And as a provider of real estate sales for a client that can't get a mortgage, as an example, if you have another tool in your tool belt to help them get into the ownership of the house, that is likely going to create more referrals for you because, hey, I went and I met with Ken and he was able to get me a solution to buy a house. You should go see Ken because this guy is fantastic. Not only is he great at selling houses, he knows other ways that we can get them if we can't get through a mortgage, right? Those conversations happen and can be a very good outlet for you. So there's multiple ways that you can monetize using our system. When a client comes into our rent to own program, one of the things that's critical is the support system that you put under them. And we have created, we feel, is the industry leading platform for clients when they come into our purview, and we call it our Path to Home Ownership program. And inside of this program, the clients will receive access to credit, mortgage, real estate investing, all kinds of different information, and they will meet with industry practicing industry professionals to learn more about finance and the home buying process in general. And our goal is to connect them with all the resources and tools that they need to be successful. We do live webinars. There's so much in here, and we'll talk a little bit more about this as we go through it. But we want to make sure that when clients come into our purview, they're taken care of, and they have people supporting them through the whole term, so that they know exactly what they have to do. Because most rent-own programs fail because the guidance is not given from the start to the end of what the client needs to do on a monthly basis to get in a position to get the mortgage down the road. So part of our Path to Home Ownership program is the financial blueprint to get the exit, financial assistance, credit coaching, and access to monthly events. The way that we work it for that, we want to work with serious clients. So when clients come into our purview and we approve them and say that we can match you with an investor, we want to know that you're committed. So we ask for an initial deposit of $975 to show that they're committed to us now going and securing them with an investor and going through the motions to get them into a home. At the end of the program, when they are successful and they have followed our Path to Home Ownership, we reward them by giving them the $975 back towards the down payment on the house on the back end. So it's an initial deposit that comes in on the front end that sort of let's keep paying attention to our program here, because you paid $975 to come into the program to get to the back end. And when they exit the program and we arrange the mortgage financing for them, the $975 comes back. But we'll talk a little bit more about that, because Dale, if you want to change the screen, we'll do the summary first. We'll talk a little bit more about that in a second. So to recap, rent to own, purchase files, minimum down payment, 3%. The future purchase price is predetermined, agreed to, all contracts are signed before we start the program. Contracts are signed, ILA. Our monthly payments include everything: property taxes, insurance. Nothing needs to be paid by the client outside of our lease payment as far as the property and carrying the house, except their utilities. So it's our lease payment plus utilities. 20% of the gross payment is savings. ILA, or independent legal advice, is a mandatory part of our process. We are educators about rent to own, but we want to make sure that clients understand it before they sign agreements. So we want their lawyer to interpret the legal risks by receiving ILA. Credit coaching, of course, is provided through our Path to Home Ownership, and we are a tenant first program. So we work with the tenants to make sure that there's a good program here, and there's balance for the tenant, there's balance for the investor. Then they get matched and they go and they find a property on the open market, working with you as a realtor and finding a property that works for their family, because in most cases it's going to be their forever home. So we do not have an inventory of houses. Our clients go shopping on the open market to buy anything that's available through, I guess, realtor.ca or even private sales.
Okay, so Terry, a couple questions. The monthly payments, that includes land transfer taxes on both the investor side and the tenant side as well too, or no?
When the program starts, our investor will provide all of the closing costs. So they will pay the land transfer tax, legal fees, appraisals that need to be paid as part of their mortgage process when they go, and because most of our investors leverage the investment. So they will put down 20%, they will handle all the closing costs. When the client exits the rent to own program, they will then have the land transfer tax component on their side of the ledger. They'll have to pay it because they're buying the house. Now, we are working with a couple of the regulatories to find a way that we may be able to get around that. I can't say that we're there right now, but there's a possibility that caveats can be registered so clients don't have to pay the land transfer tax, so it doesn't get paid twice in 3 to 5 years. But
Like
initially, Ken, it's all paid. It's all paid by the investor.
Okay, sort of like a trust agreement or something like that.
Yeah.
So another question I have is, when you're shopping as a realtor, helping the buyer, the rent-to-own client, are you helping? Who's selecting the property? Would it be the tenant or would it be the investor selecting the property?
It'd be a group thing, right? So the client needs to be involved because it's going to be their house. They want to make sure that it's going to work for their family, right? The investor's involved because they want to make sure that, the house got good bones and stuff like that. And the realtor is involved because, well, obviously the expertise that the realtor brings, especially in this market, they're more valuable than you can imagine, of course. But they're all involved in the selection of the house because the tenant, right? Our tenants will be approved for a certain purchase price. And we don't want to get over excited and get into a bidding war, and all of a sudden a client that's been approved for 600,000 is now the investors put a house on 755 because that's all they could get it for. Right. So
Right.
we all work together to make sure that the purchase price range is right and all the expectations are set up front so that we don't get into overextending the client. But all three parties are involved, Ken.
So then when you're taking the person out showing to show properties, I mean, is it the investor just looking at a spreadsheet, or are they actually coming out as well too? Do the investor and the tenant actually get to meet in person, or do they?
Yeah, yeah, Carlo, we'll get to that one in a second. Our investors, right? We are moving to our product is, from the investor perspective, is more of the commodity approach. Okay. Where we have standardized product and it comes out with standardized returns. And really the investor says, well, I like that area, that client, yeah, I'll take that product and I'll move it over here. So the investors typically aren't involved in the shopping per se, right? What they do is they look at the pro forma, and then when the inspection report comes in, because everybody should have an inspection on the house, and our program, all investors want inspections, right? So they'll base their decision on the inspection of the house, the listing, and probably conversations with the realtor. Not all of them are involved actively seeing the house, but if it's in their local area, they might be.
Yes, it's pretty much like investing into a private mortgage or something along those lines as an investor. So
Sure.
you're basically taking out the tenant or the rent-to-own client as the one shopping.
Yeah, it'd be the client that would be the one shopping, and once they identify the property, is for the investor to sort of approve it.
Okay, so let's talk a little bit about the process again, just to me get the little bit clearer understanding. So when you find a client that doesn't meet the regular Schedule A bank criteria, then they're going to go through this rent-to-own program. You go through a vetting process. You put the $975 to get involved into the program.
Yeah.
You do your vetting process. How long does that process usually take?
We have our vetting process to get an answer back to the client is usually the same day or the next day.
Awesome. Okay,
right?
So then once they get approved, then you start shopping, and then at that point,
Well,
do the
they would
deal?
get approved. So I'll just take you through
Sure.
a couple of steps. So the client comes into our purview, right? We do an initial screening on them because there's certain metrics that we're looking for, and we'll send them an approval, right? With numbers, right? Terms, and they will basically be given a choice. Here's the numbers that we've talked about and quoted you. If you want to move forward, push a button and get me matched with an investor. So they'll come back to our purview and say, yes, I want to move forward. I want to get matched with an investor. Then, right, we'll get them to go and complete their initial deposit program. Once we know that they're serious and we've got them vetted and they're ready to go, we'll introduce the realtor into the mix at that point before they go out and start shopping for houses. I want to raise the flag. Rent to own is a great process, but it doesn't move as fast as mortgages. So it's hard for clients to go out and find a house and say, oh, I found a house and the condition is 3 days, and that only gives us 3 days to get the investor on, right? So we look to have, when the client says match me with an investor, our timeline to have the investor on board and ready to start shopping is 10 days. But the client approval will happen the next day. But the process of doing the vetting and getting them matched with the investor and all that can take up to 10 days.
Okay, so once they're vetted with an investor, then we can start shopping right away. What I'm curious about is, in a fast-moving market like Toronto, do we have to put a long condition for financing? Because I don't think that's going to happen in a competitive market like this.
No, it's one of our biggest challenges, Ken, right now, right? Is the way the offers are coming in. First of all, the challenge of people finding houses, and then when they find them, we have to deal with the speed in which the offer needs to move. That's why we always encourage people, if rent own is for you and you want to get matched with an investor, let's get it done before you start shopping, because then we can react to those quick closings and those quick financing conditions.
Right. So once you find the investor, and then you have some sort of set criteria that the investor is okay with, I guess you could say.
Yeah.
And then you put the offer down, you get the investor to give the final approval, and then you move forward from there.
Yeah.
Is that?
Okay. Yeah.
And then Alexandra had a question as well too. What happens when an investor has a realtor they would like to use, but you're working with the buyer, or she's working with the buyer?
Okay, so if you bring us files, right? If you bring us files, then you're the realtor. The investor doesn't have a choice, right? Unfortunately, now the investors have certain people in their mix that they've worked with before. They have a realtor, but that's okay. This particular client came with a realtor attached, and this is the process we're going to use. So unfortunately for the investor, if they don't want to move forward because they can't use their own realtor, then they can't be part of this particular opportunity.
Sounds good.
We value the relationships and the work, Ken, that real estate agents do to get clients to the buying stage, and we will not cut that relationship. Definitely not.
Great. Thank you very much. That's amazing. What happens from the perspective of the real estate agents working with the buyer, when we find a property that they like, we put the offer down. In terms of a conditional period, what are you seeing? So you're saying 10 days, but what if you do all the work ahead of time? You get the criteria really tight, and it matches that.
Yeah. So again, right? So we have client comes in, gets approved. We start the matching process. Some investors have a line of credit; they'll pay cash. Some have cash. Some have a credit card they can spend $600,000 on, for goodness sakes, right? But the ones that need to get financing or want to get financing for the leverage, that's what takes the most time in the 10-day window, right? But once the investor's got his financing lined up, everything is good. Then it's just a matter of identifying the property. And typically, if they're pre-approved at the lender, and we take care of that, right? Some of that stuff in-house, right? And through some of our mortgage partners. So the investor will be ready to pull the trigger fairly quickly. And it's always best to get that in position before the client identifies a property, because of the tight timelines. I mean, I had a client lose a house because the seller wouldn't give them a day and a half to do an inspection. Right? It's just, the market is just so different than what we traditionally deal in. It's always best to get the pre-approval and get it in place so we can move quickly.
Funny enough, that's kind of normal in Toronto. So do you always do one-to-one relationships between the client and the investor, or is it like sometimes a client to a pool of investors? Are you allowed to do that?
Well, we haven't at this point. We have multiple ways, Ken, to fund our deals, right?
Okay.
So we have individual investors, and we have our own methods of funding in-house, right? That we have worked out, and but generally we wouldn't go after a group of investors to buy one particular property. That's not been our MO going forward.
Yeah,
Or
sorry, I'm just trying to find a
in
way.
the past.
I'm just trying to find a way to shorten the approval cycle. So when we have from the time of an offer to a conditional offer to a firm offer.
Yeah, we're really on our investor group right now. Dale is numbering 9,000.
So lots
Yeah,
of big
approximately 9,000. That's right. Yeah.
Yeah, so we have 9,000 investors in our group that are individual investors, and we also have the ability to self-fund some of the higher purchase price files, and they can be closed very quickly.
Great.
But again, typical file, get everything in place, get the investor or the funding mechanism in place before the property is identified. Then we can move quickly based on the offers.
Awesome.
Dale, next screen, please. So what we do, two things, partner registration. I think Carlo had a question there. How do we get registered and get on the list to be an investor? If you come in through the URL there, homeowner soon partner registration, we can get your information there. And I want to put out there that every Thursday, and anybody who's interested in this, and Ken, maybe we can send you an invitation. You can share it with your team, or you can share your team's list, and we can share the invitation with them directly. Every Thursday, we have a partner forum, and that's where we come into and spend an hour, hour and a half to talk about topics or pieces of our platform that we want to discuss specifically. Right. So it's an open discussion. We offer it every Thursday for all of our partners to come in. If you want to learn more about rent-own, meet our team, find out more about who we are, what we do. It's available every Thursday to come in and learn more. And we're happy to spend our time, because the more you know, the better you're going to be able to help your clients. And our goal is to help you help more clients. End of story. Can a house with an offer date be an option for the rent to own list? Can a house with the, I'm not 100% sure what that question meant, but I believe the answer is yes.
I think Dwayne is asking for an offer date. That's pretty common here. Bidding wars. We're seeing that in the Toronto market. Can that be an option for the rent to own list? So it's kind of like what I was asking about a competitive offer where we're going to go in firm without a condition.
Yeah, they're again, it's tough, right? They're tough. If you have deals that the client's firm on and they lost their financing, right? We might be able to do something quickly. So if you get in situations where the client's in a bad spot, pick up the phone and give me a call, right? And we can talk it out in a couple of minutes. I can tell you whether or not I can help you and whether or not we have investors that can move quickly based on the situation. Most sellers in the market do not want conditions on the offer. Yeah, and I know that's a tough one as well, right? The financing condition usually is not a part of it, because the investor would be approved before, and that's why getting the investor ready, you wouldn't need to put a financing condition in. The only condition outside of that would be the inspection normally, right? Financing and inspection. So if the house is pre-inspected, right, we can probably work with the inspection, but unfortunately, because most investors, if they're not able to get to the property to see it, they're not going to buy it sight unseen. They're not that motivated to do it. So we look for inspection.
So Dwayne, I think to answer your question, you gotta have to really start the process of the tenant, or I always say tenant, but the client and the investor matching sooner rather than later. Get the criteria ironed out as much as possible, and then I guess you have to. I don't know if you take a risk or not, because I guess you'd have the investor as the purchase, right? On the agreement purchase and sale would be the buyer. So you'd have to find a buyer willing to commit to purchasing it first, and financing it.
Yeah. That's always the best way, because if you've got it's like anything, you got your funding in place and you can deal with other variables that aren't usual that come to your table, right? Somebody put an offer in, I need an answer in 2 days, right? We are able sometimes to help in those situations, but as much as we can avoid them, the more we can avoid them, the better. Right. But it is a tough market out there. I understand you guys, it's a tough market. I a lot of respect for your profession, especially in this market. It's crazy. But if I can, again, just reinforce getting the investor approved and everything lined up before the house is identified will be a much better path to travel.
Yeah, it's perfect, because I'm just looking at the perspective when I invest into a private mortgage. I look at the appraisal value, look at the loan to value. Hopefully, the appraisal comes from a verified source. As a realtor, I'm able to kind of verify the value of the property.
Yeah.
And then I really just look at numbers, and I look at the report. I look at there chances are there generally isn't a home inspection involved in that, but if there is, that's great. And then I'll make a yes or no decision on the spot. So hopefully, if you can line up those variables and kind of put the criteria tight enough to convince an investor to just go in like that, then I think it'll make the job easier for you as a real estate agent.
Yeah, and we have shifted our model and our approach to more of that commodity approach to help alleviate some of that. So our investors will come in and look at something and say, "I'll buy that," rather than doing a deep dive in the diligence part of it, knowing that we have done it.
So I guess any other question? Okay, so we got another question here from Ryan. If a buyer and investor are matched up and lose on one property, can they quickly pivot to another property?
Sure.
Okay, the answer is yes.
The financing is in place, so if they need to move to something different, not a problem.
Right, because I guess you all know that the approval of a purchase of a property is based on two things, right? The banks will look at you as a borrower, and then they'll also look at the property itself. So as long as the property appraises and has the conditions that they need, and the investors approve, then you're good to go.
Yeah.
That seems pretty straightforward. I'm just, sounds good. I guess I'm kind of concerned about how it makes sense for the investor, but I guess that's another conversation we can.
Well, we can, we have we run investor presentations every Tuesday at 11 and every Thursday at 7 p.m. I'm happy to share the link for our Thursday meeting coming up. If there's anybody that want to jump in and learn more on the investment side and how we talk and handle clients from that side, you're more than welcome to join. And then, as if you go to some of those sessions and after listening to our presentation here, then it might be a good time to come to a Thursday event in our partner forum to discuss the things that you've learned and ask questions just to get clarity on it so you understand both sides of our ledger.
Sounds good. So we have a couple minutes left. First of all, I want to thank Sandra for bringing Terry and Dale on. And Terry and Dale, thank you very much for doing this, and everybody for attending. So everybody can go visit homeownersoon.com/partner registration if you're interested in learning more as a realtor to help your clients, or just go to the website homeownersoon.com to learn more. If there's any last minute questions, please answer now, or please ask now. I mean.
And Dale, if there's anything that you want to add here, or if you feel we've got all the check marks, we can move on if there's no more questions.
Yeah, I guess one of the last things I'd like to add is that one of the most important things is keeping you in the loop throughout the entire process, throughout the entire flow, right? So when we approve a client for the program, you'll get notified. Once they've passed the underwriting, you'll also get notified. And as they go through the investor process, you'll be notified as well. So keeping you up to date is a very important key part of the process, so that you're always in the loop as to what's going on throughout the flow.
Yeah, we've set up our funnel, so every stage the client moves through, it kicks out an automatic email to the partners associated with that account to let them know that we've made a step forward.
We have another question here. Krista is asking, will this work in Ontario markets, and is this just dependent on the property, or is it mainly in Toronto?
No, anywhere. So, yeah. We're across Canada. I'm actually coming to you from Nova Scotia right now. So, you know, we are BC, Calgary, Ontario, and Nova Scotia are our 4 most active provinces right now.
Where you can match the buyer and the seller. You're the intermediary between the buyer and the investor, really, actually, I should say. That's your main role in this. So as long as you have an investor willing to buy something, then I think it'll work.
And with our commodity approach, right, and we manage the clients in-house. We collect the rent from the clients and report that to their credit bureau as part of their rebuilding strategy. We are very involved with quarterly reviews on the property, all that kind of stuff. So our investors are becoming more comfortable about locations, because it's less about the location and more about the support and management that we give that particular opportunity. So if you have a client that's somewhere out, you know, out of province or northern, you know, in a smaller community, some of those smaller communities are becoming more mainstream as people push out with the ability to work from home. As of, you know, COVID created the phenomena of people working from home. So we're doing deals in areas that never even knew how to spell before, right? Because they're becoming, people are moving out of the big city to get to houses for 200,000. So we're across Canada.
Another question we have is, does this work with condos? And I think the answer is yes. I mean, I know the answer is yes, but how does this work with condos? Where do condo fees fall in payments for a client?
Great question. Great question. The second part of that question, great question. We work with condos. The condo fee will be over and above the payment that we quote, but we'll dig in through the status certificate and look at the condo fee to see if there's any components in the condo fee that might be included in our payment, such as some condo fees have building insurance. Some condo fees pay the building taxes. So we'll take it out of the payment structure to reduce the payment. So the payment plus condo fees doesn't get too pricey, but whatever we quote on a condo, the condo fees will be over and above that.
Okay, sounds good. So we're just about out of time. If you have any questions, again, visit homeownersoon.com/partner registration. I want to thank you, Terry and Dale, for doing this, and Sandra for bringing it on.
Thanks for having us.
Thank you, Terry.
Thank you, Sandra.
Thank you, Terry. Thank you, Dale. Thank you, Ken.
Thank you, Sandra.
Thank you to everybody.
Have a great day.
Add it up.